Construction accounting for custom home builders is unique and operates in a world of its own. Using generic accounting software often leads to double entry into many spreadsheets, causing delays and inefficiencies. This results in the accounting team spending so much time managing data instead of providing the timely answers that builders and other team members need for operations. In our first video on team collaboration in CHS, we explained how the builder owner can set up job cost codes and use CHS to communicate their purpose to the entire team. We also discussed how builders or estimators can utilize master defaults, historical data, or vendor bids to prepare estimated proposals that provide invaluable data for both customers and the team, seamlessly interacting with CHS's accounting features. Additionally, we highlighted the importance of purchase and work orders for effective communication between vendors, project managers, and accounting. In this video, we will now demonstrate how the accounting team can efficiently use the information provided by the builders, estimators, purchasing, and project managers to perform their tasks without constantly interrupting the building team. Finally, we'll show how the building team can quickly get the answers they need from the accounting team, completing the full circle of seamless collaboration. With CHS, you have the tools your accounting team needs to navigate the very complex world of construction accounting with confidence. However, construction accounting itself usually is not taught in basic accounting classes, so no matter what software you use, many bookkeepers need guidance from a construction-savvy accountant, either on staff or on contract, to mentor them. CHS understands this need, and that's why CHS has several features for your accountant to set CHS up to help the bookkeeper. So what we'd like to help you do is take a proactive approach to your accounting and avoid cleaning up messes later and recognize your revenues and expenses properly. We'd like you to pay attention to accounting now so that you can stop worrying about it later. At CHS, we do understand what it takes to prevent construction accounting chaos and confusion, and that you need a clear system to avoid last-minute scrambles and ensure seamless communication across your entire team. Both the builder owner and the bookkeeper must understand that construction accounting differs significantly from the basic accounting taught in schools. This knowledge is essential for the bookkeeper to grasp why the cash method of accounting is not very good for construction accounting, and why there are additional steps involved in entering job cost payables in construction accounting, and why alternative approaches to accounts receivable might be necessary for customer billings. Construction accounting is unique due to the nature of projects that often span multiple periods, requiring real-time tracking of job costs and revenues, and frequent recalculations of critical financial metrics, like revised estimated costs at completion, revised contract prices, and current contract balances, in addition to calculating how much income you have earned on a job as it progresses. The IRS recognizes this complexity and allows for different accounting methods for your tax returns specifically suited to the construction industry. CHS understands these complexities and provides the tools you need to effectively manage them. So if you're the builder or owner listening to this, you might be thinking that this video is only relevant for the accountant, or hoping that it is. But bear with me, even though I'm about to use some technical terms that might seem overwhelming or that you don't know about. That's okay. We'll soon get to the solution that can help you avoid having to deal with these terms directly. It's important for you to have some understanding of this, regardless of the software you use, so that you can ensure that your accountant and bookkeeper are aware of the capabilities CHS offers. In this video, we'll discuss some normal mistakes that can occur when a bookkeeper isn't familiar with construction accounting, and we'll examine how they can impact your financial statements. We'll also introduce you to the IRS-approved percentage of completion method, which can really help streamline your accounting processes. So let's begin by examining the pitfalls of using traditional accounting practices, such as posting an upfront down payment directly to sales on the income statement and recording job costs directly to a cost of sales account. Imagine that you've signed a contract and have received a $75,000 down payment. along with incurring a few upfront job costs. Posting the down payment directly to sales will immediately inflate your income for that period. However, the issue is that the work associated with that payment has not been completed. This creates an inflated revenue figure on your income statement, which does not accurately reflect the progress of the project. This misleading figure can lead to a false sense of profitability and result in poor business decisions. Some accountants might be used to using a WIP report, like we do have available in CHS, to identify the amount of billings in excess and then create a journal entry to debit an account called over/under billings on the income statement and to credit an account called billings in excess of costs on the balance sheet. This adjustment reduces the sales figure on the income statement, indicating that the revenue hasn't been fully earned yet. While this adjustment helps present a more realistic financial picture, it can also cause confusion. It requires constant journal entries and results in revenue being reported on both the income statement and the balance sheet, which can be confusing. Now let's consider a scenario where the $75,000 down payment has not been received yet, but some job costs have been posted directly to the cost of sales on the income statement. This scenario is also misleading because it doesn't show any earned revenues. In such cases, an accountant might look at the WIP report again and create a journal entry that now credits over/under billings on the income statement and debits an asset account on the balance sheet named costs in excess of billings. This type of adjustment can also cause confusion. It too requires constant journal entries and results in earned income being on the income statement and balance sheet, which can be complex to understand and to reconcile. Furthermore, home builder consultants often advise that bankers, investors, and bondsmen prefer not to see significant liabilities for billings in excess of costs or large assets for costs in excess of billings on your financial statements, because these can suggest poor cash flow management. Since CHS is flexible enough to accommodate all of your accounting needs, we were able to use CHS to demonstrate the pitfalls of posting costs and revenues directly to job costs and sales in a home building business, and the confusing workaround that involves using over/under billings. However, we believe neither of these methods is ideal for custom home building. Given that custom home projects often span from one year to the next, we think the percentage of completion, or POC method, is the best approach for gaining a clear understanding of your financials. This method is not just preferred by consultants and accountants, it's also favored by key stakeholders like bankers and bondsmen. They prefer the POC method because it provides a more accurate reflection of your project's financial status, giving both them and you confidence in your financial statements. Additionally, since the IRS recognizes the POC method as a valid method for construction companies, you can select Other as your method of accounting on your tax return and then simply type in percentage of completion. So let's see how the percentage of completion method can simplify this process and provide a clearer financial picture for you. And after that, we'll take just a quick look at the completed contract method. It's time to involve your accountant in the setup of CHS. The first step in implementing the percentage of completion, or POC method, is setting up your chart of accounts. When you receive a payment from your customer under the POC method, it is recorded in a construction liability account on your balance sheet. Likewise, when job costs are incurred and posted during the progress of the project, they go into a work in progress, or WIP, asset account on the balance sheet. These amounts do not go directly into sales or cost of sales accounts. Instead, they are held in these balance sheet accounts until a POC journal entry is calculated and created with the help of CHS, typically at the end of each month, when the earned revenue and related costs are moved to the income statement via the journal entry. To effectively track the totals posted to the work in progress and to the construction liability accounts, we recommend setting up and using contra accounts that could be called something like cost of sales recognized to hold the totals transferred to cost of sales, and job income recognized to hold the totals moved to sales. The amounts posted to the cost of sales recognized will reduce the overall balance in the work in progress section, while the amounts posted to the job income recognized will reduce the overall balance in the construction liabilities section. This approach allows you to always see the original amounts posted to the WIP and construction liability accounts until the jobs are closed. CHS offers the option to load a recommended National Association of Home Builders or NAHB chart of accounts, or a simpler version we've created, both of which include the necessary construction liability and work in progress accounts for the percentage of completion or POC method. You can review these charts, load the one that fits your needs, and then make adjustments as required. Alternatively, you can set up your own chart of accounts from scratch. CHS also provides comprehensive help tutorials to guide you through the process of setting up your chart of accounts and, if necessary, entering your opening balances. Additionally, your accountant can add notes to each account in the chart of accounts, providing helpful context or instructions for the bookkeeper. These notes will be visible to the bookkeeper when entering accounting records, ensuring that they have clear guidance on how each account should be used. And while it's not mandatory to use the percentage of completion method, and you can set up your own chart of accounts in any way that works for you, we highly recommend using this approach. For expediency, I have gone live to CHS for just a second to explain to you that all we have in here is a few job costs, and we posted a deposit for just one job. We're going to leave it clean like that so that we don't have multiple jobs. I wanted to reassure you that once we start drilling down and later on when you have multiple jobs, CHS will group and total reports by job for you so you can see the amounts for each job in the account. But what I'd like to show you is if I click on this icon right here, I can see the current detail behind the current balance in the account for our direct construction costs, which is our work in progress account, and you can see things listed here. Now I'd like to show you that one of these says it was in the deposit journal, and that was because this was a deduction from our deposit for a wire fee that I'm going to show you in just a second. A good way to look at a report like this that is just about job costs is to do a ledger grouped by GL, then cost code. And you can see how nice that has been grouped by the cost code building permits and how much is in it, cost code lot clearing, and there's that bank fees where we put a cost code on it so that it would show up on our job cost reports. Let me close that. Now I have scrolled down to the construction liability section, and if you click on the detail there, you're going to see the detail behind the total deposit we received that was posted to contract deposits. I'm actually going to delete this deposit and go re-enter it here in just a second so that you can see some things that the accountant can set up for you and then how you enter a deposit. After that, we are going to go start taking a look at the percentage of completion. Right now, since job income recognized and cost of sales recognized have zeros in them, it indicates to us that we have not done any percentage of completion journal entries yet, and in this video I am determined to show you how quickly CHS can gather the numbers you need for that and give you a tool for posting your journal entries for percentage of completion. Before posting our down payment deposit, I'd like to highlight another way your accountant can assist by setting up deposit categories to simplify the bookkeeper's job. Deposit categories should have clear, easy to understand names for different types of funds that you receive, such as down payment, change order deposit, draw from bank, or draw from customer, etc. The accountant can then link a default GL account to each category, which will automatically populate the bank deposit window when the bookkeeper selects a category. These categories also help group and total job revenues on a report that is straightforward and easy to interpret. Additionally, there are job cost and job cost credit categories available for posting job cost deductions from a bank deposit or payments received to reimburse a job cost. When these job cost categories are selected, CHS will open a field to choose the job cost code, ensuring that the record appears on job cost reports rather than job revenues reports. Another great benefit of CHS is that it can organize data by departments. Departments like custom homes, spec homes, remodeling, property management, or overhead. Your accountant can set up these departments and assign them as defaults for specific jobs. That means that when entering data and selecting a job, the department associated with the job will automatically drop in. This functionality enables CHS to generate financial statements or general ledgers for each department individually. Your accountant can also assign default general ledger accounts to specific jobs, which will automatically populate when posting job costs. For instance, a custom home job might have a department code of CH for custom homes with a default job cost GL set to a work in progress account. Also note that we have set up and attached a buyer to this job. Therefore, when we select a buyer when entering the deposit in just a minute, you will see that this particular job also drops into that accounting record. In contrast, a remodeling job could have a department code of REM for remodeling with the default job cost GL set to a cost of sales account. That's because remodeling projects typically have a shorter duration than custom homes, and they may not require using the percentage of completion accounting method. Now that our accountant has set up the chart of accounts, departments, deposit categories, and attached a default department, job cost general ledger account, and customer to our Campman job, let's go ahead and enter our down payment for that job. First, we selected Campman as the payer, and the job Campman and department CH automatically populated, both based on the job's default settings. We then typed a meaningful description for the deposit record and chose the down payment deposit category, which brought in the default GL account for contract deposits under contract liabilities. We entered the amount of $75,000 that the customer sent us. However, since the bank deducted a $40 wire fee that we want to post to job costs, we clicked the icon to copy the line and change the description to wire fee on down payment, entered a negative amount of $40, and selected the job cost deposit category. Selecting that job cost category opened up a field for us where we could select our bank fees job cost code. After verifying our net deposit shows as $74,960, we selected the appropriate bank account, entered the deposit date, and are ready to click Submit Deposit. So now that we've posted our down payment and previously recorded some job costs, let's quickly explore how we can review all of our accounting transactions for the Campman job. First, we'll look at a general ledger filtered specifically for our job. Our costs are recorded in the Work in Progress account 1430, labeled as direct construction costs, while our down payment is recorded in the Construction Liability account 2010, labeled Contract Deposits. You'll notice that all of the entries on this ledger are tagged with the job code Campman. Additionally, the entries in the Work in Progress account have job cost codes other than 0, which indicates that they are indeed job-related costs. So let's also review these costs grouped and totaled by cost code on an actual job cost report, which can be accessed from the jobs dashboard for this job. Notice that one of the records has an attachment, likely containing a copy of the vendor's bid or invoice that can be clicked on and opened. We'll also take a quick look at our current job revenues report, which will be grouped and totaled by those deposit categories we mentioned earlier. There is also another powerful method for our accountant to review these transactions by examining the trial balance grouped and totaled by job. This worksheet should be reviewed at the end of each month before producing the percentage of completion journal entries we're about to do. That's to ensure that there are no entries in the work in progress accounts for some job that has already been closed. This worksheet is highly interactive, very powerful, and allows drill downs into the detailed entries so that the accountant can study each and every account by job. So I have gone live again so we can take a sneak peek at the screen that is gathering all the numbers that we need for posting a percentage of completion journal entry. We're going to take a look at how now everybody becomes involved in the numbers that CHS ends up putting on this screen. First of all, I'd like you to know that the way the percent complete is calculated is based on the jobs to date costs incurred divided by the current estimated costs at completion. It comes up with a percent, and then it takes what our current revised price is and applies the percent to that to come up with the job to date revenue earned. Hopefully that makes some sense to you, but I want to make a point here about something. First of all, CHS is very smart about knowing which type of contract you have on the job, whether it's fixed lump sum or cost plus markup or cost plus builder fee. So I'd like to take a peek behind the curtain and look at the price calculation for this revised price. This is the window that is used when you have finished doing your job budget proposal and you are getting ready to set a price. Normally, by the point you are doing something with percentage of completion, this will be locked and you will not be able to make any changes unless somebody with a super high permission level unlocks the budget and the price. We have this set to a fixed lump sum contract. We ask for desired profit percent, and we set a price here that we printed on our proposal. However, look what's going on next to it is a current revised price, which is the fixed price plus the total price for a change order. We don't have any allowance adjustments yet, but we'll see that before this video is over, where it's also revising the price. But notice that we have a revised price that includes the amount of the change orders here. And we can see that price, that revised price right here, $1,479,257. Now look what happens if I change this to a cost plus markup. And the point I want to make is that for a cost plus markup, you are saying that the customer will pay all the costs plus a markup on all of the costs. So you will see that markup percent put in here, and you'll see that we're seeing the current estimated cost at completion, which can be varying as things change throughout the progress of the job. So CHS is showing the current ECC plus 25%, which is the percent markup, and changing the price to a revised price of $1,485,685, which is different than this price over here. So let's see what happens if I just close this window. Watch this price. It just changed to be that current revised price. So you can see how CHS is looking and reacting to both a combination of how the ECC cost might be changing and how the price might be changing. Let's drill down to it one more time and change it to a cost plus fee. This means that the ending price or the revised price will be based on the current estimated cost at completion plus the builder fee that was set when you set the price, plus the amount of any fees that are put on to change orders. This isn't the price of the change order, this is the amount of fees that got added to this. So you can see how this can be changing, and right now it has the cost plus markup price here, but when we close this, CHS is going to adjust to this price that we see for cost plus builder fee. Watch this price change. Let's go back and change this to a fixed. So what I'm trying to impress upon you is how now people have become involved in this. The estimator, whoever was setting the price, whether it's the builder or estimator, has affected what we're using as the price and how the price changes based on the contract type that was selected. Also, the field starts becoming involved when you get to the estimated cost at completion, and we're going to see that in just a minute about how the field may be doing some revisions for the estimated cost at completion today, which would totally affect this calculation because it's based on current posted costs divided by the estimated cost at completion to come up with the percent complete. So let's take a quick look at our estimated cost at completion. We will just barely look at it and come back and do this POC journal entry so that we can see how everything works. So if I click on this estimated cost at completion, the estimated cost at completion worksheet will open. And what you can see going on here is that we see the original budget proposal that was created, plus any change orders that were created. If we drill down on the change orders there, we can see that we had a change order for a hot tub and that its cost was estimated and a price was put on it, and we're showing the estimated profit. What you see here, $7,000, is the cost of change orders, and you might see some more after a while. But then we have a total budget, which is the original budget plus change orders. So we have a total budget. And what this worksheet is looking for is how much the estimated costs of completion today are expected to be over that total budget. You can see that we have our actual costs here that we've been looking at for our example, and if I drill down on the total actual cost, you can get a job cost report like we've seen before of the various things, including our $40 bank fee. What I'd like to talk about is that there's some purchase orders that have been issued, but not all, but they are affecting our current estimated cost at completion. And if you drill down on the over budget amounts, you can see what things are causing our over budget. A big one is framing labor. So let's take a glance at that. It was budgeted for this amount, but there were POs issued for that. So CHS is picking that up and saying the ECC right now is this amount, which has increased this to be so much over budget. You can see that out in red. You can also drill down to see if you can see why it's over budget. And it does say here, somebody has written here, Acosta is charging $9.50 per frame square feet instead of $8.50. So that explains that. What we're going to do is we're going to leave this alone. Since we are near the end of the year, we're fine with just leaving this based on our actual costs. And this ECC, we do know about this over budget, which is affecting it just a little bit. But we're going to leave this alone and come back and actually go through several of these things and start changing the ECC based on things that we know. Like, for example, you can see there's a purchase order here for less than the budget, which we can check mark and cause this to go less. But I want to leave things alone because I want to completely compare our percentage of completion journal entry that we make right now to the ones that we were showing as a way to do things wrong when taking care of your earned income. So I'm going to leave this alone so that we don't change our numbers so we can take a look at it. So let's go back to our percentage of completion worksheet, and I'd like to show you how fast we can create that journal entry in CHS. I'm clicking the Create JE button. First it wants to know which sales income account we should send the earned revenue to, and you select that. Then it wants to know what contra account you'd like to use to hold on the balance sheet so we can see how much we have sent. Then it wants to know what cost of sales account on the income statement you'd like to send the incurred cost to. And then it wants to know what contra account you'd like to hold the amounts that you sent to cost of sales in so that you can always see how much you've sent out. Now I can tell you that CHS will remember this the next time you open it and fill in these numbers, and they can be changed. You should discuss this with your accountant to figure out what GL accounts you want to use for this journal entry. So let's continue to create our journal entry. CHS will display what the journal entry will be so that you can take a look at it. It's just taking and debiting and crediting what you told it to on the previous screen. And if I go ahead and just quickly click Post the above journal entry, it validates that I want to do that. And then it says it's been done. Now it shows us a report of the journal entry that was created. You can pause this video and take a study on it. But I'd like to go and see a few things about what has occurred due to that. But first, let me reassure you that if you tried clicking the Create JE button again for the selected period right now, CHS will prevent you from creating a second POC JE for the period for the job by letting you know that you have already created one for this job. It will also let you know how to delete the POC JE that you just created if needed. You can see all the POC JEs that have been created for the job by clicking the View JEs button. Let's go home. Let's go to our financials, press income statements, put in the dates that we want. Percentage of completion journal entries are usually done at the end of each month, a little while after you've studied that things are okay before you do it. So we're doing this month. Let's click income statement with GL numbers and take a look. Send it to PDF so we can see it easily. So what we have here is the amount of our earned income that we sent to sales, and then the cost of sales amount for our incurred cost, and we have a very clean income statement, which is a lot better than having a lot of that billings in excess of costs or costs in excess of billings, etc. Let's take a quick look at our balance sheet. Close that, ask for the balance sheets, put in our date, and look at the balance sheet with GL numbers. So let's send it to PDF so we can see the whole balance sheet. And again, I have not entered hardly anything into these books so that we can look at this real cleanly. But you can see here's our direct construction costs, which has stayed there even though we have moved this much to cost of sales. Now here's our contract deposits of $75,000 under construction liabilities, and it's showing how much we have sent to job income, lowering our construction liabilities. It's a cleaner, better set of financial statements that you get as a result of doing your percentage of completion in the ways that I have suggested. While we've been showcasing the percentage of completion or POC method in this video, which is commonly recommended by builder consultants and accountants, CHS offers flexibility and does not require you to use that method. If you prefer the completed contract method, which moves balances from the balance sheet to the income statement only when a job is finished, CHS can support that also. When closing a job, you can simply access the job closing window, where CHS will show all balances in the balance sheet accounts for the selected job as of a given date. By clicking the Create JE button for each account that is shown, CHS will guide you to select the appropriate income statement accounts, automatically generating the necessary journal entry records to close that job. And even if you are using the percentage of completion or POC method, you will still use the job closing window when it's time to close the job. At this stage, CHS will show you a list of general ledger accounts that have balances in the balance sheet accounts. However, this time you will likely see the contra accounts we mentioned earlier, which store amounts already moved to the income statement. In this process, for example, you will transfer both the direct construction costs from the work in progress or WIP account and the cost of sales recognized account balance to the cost of sales account on the income statement. Likewise, you will move any construction liability account balances along with the job income recognized balance to a sales account on the income statement. Your accountant can guide you in deciding which accounts to move these balances to. Now that we have spent some time introducing you to the percentage of completion accounting method and how your accountant can help you get that set up, and how CHS makes it easy for you by gathering the numbers needed for it, let's wrap this video up and move to a video for the next month in the progress of the job we have been watching. In that video, we will focus on how crucial the bookkeeper's role is when posting job cost vendor bills as soon as they are incurred. We'll show how the bookkeeper can really shine and save everyone a lot of time. As they enter costs, we will show you how essential it is that they take their time and pay attention to any alerts CHS may generate, such as vendor insurance expirations, outstanding waivers of lien, duplicate invoices, and most importantly, warnings about heading over budget or purchase orders. CHS is designed to flag potential issues early, ensuring all parties are aware ahead of time. Now, I understand some builders hesitate to post vendor bills immediately because they want to approve them first. We want you to realize that the bookkeeper can enter the bills, and then there's a place inside CHS for the field or the big boss to approve the bills before they're actually paid. Let me show you how posting them right away can benefit you and your financial planning. Stick with me and I'll show you how this process will streamline your workflow and make everything easier for your entire team. Thank you for watching, and please stay tuned.